Bank has kept its key lending rates unchanged. As per expectations at 5.25%, Chairman Jerome Powell said that a rate cut in September is pretty much on the table, an assumption that even the market is working with. And this even as the FOMC members cited further progress towards the 2% inflation target, but the Fed chief has also cautioned against assuming that a cut was definitely happening. The forecast for the September rate cut, he said, was based on the assumption that the US economy follows its expected path. Remember, the US GDP numbers surprised on the upside. Let's hear out what he had to say. Okay, we'll play that soundbite shortly. But yeah, the global markets have nothing really to worry about. In fact, it's been a decent handover, not a rah-rah move again from the US equity markets, given that the Fed has played exactly on expected lines. No surprise at all.
Yeah, just no surprise, and the communication is very, very simple to understand, and the communication is pretty much what market expected and anticipated, that in the next meeting hopefully a rate cut is coming. The Fed narrative, and I've been making this point for a while now, that the Fed impact on financial markets over the years is getting diluted. And that is something which we now need to understand, that while Fed is crucial, Fed is important, but in terms of are they setting the tone for every narrative for financial markets, I think that clearly is getting diluted. That's one part of the story. Second, since the narrative is on expected lines, where is the dollar index, 10-year paper, 2-year paper? For me, those are the more moving parts in terms of whether trade setup in the near term would move. So where we left off yesterday in terms of the global setup, well, we are picking it from there only. Dollar index 104. It's a number which is a okay number. Yields are at 4%, which is very important, and volatility is under control. So I would say that when we went home yesterday in terms of the global setup versus where we are right now, nothing has changed and everything has come on expected lines, with the exception of Meta, where numbers have been very strong. That is having impact on Nasdaq, but that is something which will not have a rub-off effect on Indian markets per se. So that is where how things are. The Nasdaq number is looking very large, but that's largely because of Meta. And what we've got from Meta is actually, for those who may just want to remember, Facebook is now called Meta, and they've come out with good set of numbers.
Yeah, 2.6% gain on the Nasdaq, and it was the best session since the month of February actually for both the S&P 500 as well as the Nasdaq. And this morning it seems like Asian markets are continuing to rally as well, barring the Nikkei, which has tumbled over 3%, and Hong Kong as well, which is in the red. But let's talk about our own markets and how we fared in yesterday's trading day. And you did have a fairly decent session that played out. We wrapped up the trading day at 24,951 levels. The mid-cap end of the market held up, but the small-cap end of the market succumbed to a bit of pressure. But it was pharma that was up to its winning ways, a 1% gain. The GST hope spurred some of those insurance stocks, so they were abuzz. And Maruti as well, a result reaction, closed up in the green, Nikunj.
Siavan, the easy part is to predict why markets are moving and where they're headed in the near term. The difficult part in this market is to perhaps stay committed and don't get tempted and don't churn or change your commitment levels. Now, markets are going up, even though earnings have not been very extraordinarily strong. So now you are in that stage of the market where it all started because of earnings upgrade and then liquidity came in. Now earnings are okay, they are not great, but markets, they continue to move higher. That's largely because of liquidity. So that setup, I think, is not going to change, and that setup may just extend for next couple of, it may really be going up for an extended period of time. So nothing changes in terms of the market setup. The grey line, what I see now for the market is that banks are coming under pressure. So banks are not outperforming. I mean, private banks were supposed to flare up, but they've not done that because of technical reasons, and numbers have been okay. Second, Reliance is now threatening to go below 3,000. They came out with poor set of numbers, and that's also threatening to go below 3,000. So minus banks and minus Reliance, what happens to the Nifty? So at best, I would say that this market, in a sense, now will not do anything extraordinary, because liquidity support will ensure downside is protected. The upside, because earnings are not great, is not going to get created. There's a lot of sectoral churn, which I think is evident. Monday it was OMCs, Yesterday it was pharma. Today it could be back to defensive names. So that is that churn which I think would be the exciting part of the market. The simple and the easy answer in this market is that if you are invested, stay invested. If you're planning to invest, maybe this is not the time to invest. You should not go short in the market, but if you take some profits off the table, that would be prudence. But that's not an advice.
Yeah, absolutely. Stay the course. That's really the message for India equity markets, at least.
Anything that really stood out according to you, Nikunj? And my guess is Maruti?
No, Coal India actually. I'll tell you why, because Coal India clean set of numbers. Typically you would imagine with Coal India you got little bit of base effect, a little bit of labor issues here and there, but these are clean set of numbers. I was looking at 2-3 brokerage reports in the morning, and with Coal India, when the numbers are coming largely because of operational efficiency, which is employee and raw material cost, that means that these are numbers which are well supported by not extraordinary, but they are well supported by fundamental changes which are happening. When companies like Coal India, which have a legacy manpower issue, and when the employee costs coming under check, it clearly means that operational efficiency on the employee front can really do. See, Coal India's realization, Coal India is a global commodity company. Coal prices are based on international pricing. So there are two ways you can differentiate. One, take up the efficiency, in which I think Coal India has started, but it is still a long way to go. And second, bring the historical legacy of employee cost down. And I think that has started kicking in. So for Coal India, I think there is case for the big picture, which is coal prices have come down, now they've stabilized. B, efficiency has kicked in. And C, in general, I think there is a appeal for PSU stocks, which cannot be ruled out. And within that, I don't think Coal India is like the most sought after name also. We talk about defense, railways, we talk about railways, defense, we talk about defense and railways sometimes in the same breath. We hardly speak about Coal India. So I think in terms of the participation also, it really has still some more headroom left.
Okay, in the meantime, quite interesting. Cognizant has actually narrowed its full year revenue guidance and it's a decline of about 0.5% that they are penciling in. Quite interesting. At a time when most of the IT majors are sticking by with their guidance figures or for that matter future visibility, here comes Cognizant saying while the growth of course has been in the quarter gone by, been driven by financial services and health sciences segment, but overall they do see some amount of pressure, although bookings as well for the second quarter have seen an uptick of about 5%. But it's a brand new month, by the way, and we'll be watching out for the July auto sales.
Yeah, and Aisha, this time, today, we will be speaking to the management of Mahindra and Mahindra. Yesterday, we heard from Maruti that they expect the demand to remain subdued. Now, what Maruti is indicating is that, look, we've had a good quarter, but going forward, demand may not be that great. And they're talking about forward quarters. Similarly, our viewers would remember that Mahindra and Mahindra, there was one day it had a brutal sell-off because markets, in a sense, thought that, look, there is going to be a decline or they started offering discounts or they started bringing prices down. So is that now really kicking in? So auto numbers, considering that auto is a sector which has done rather well, auto is where a lot of wealth has got created, especially names like Maruti and Mahindra, they in a sense have really been the dominant names in terms of promise. Is anything changing? So more than quarterly numbers, I think the dispatch numbers would be important. I think, Rajesh Jujurkar's interview, I think would be very crucial, considering that are we at that turn of slowdown or this entire SUV story for Mahindra and Mahindra will continue. We are in for good monsoon. Will things look up in the tractor business? Let's just wait to hear him out. But prima facie, I think these numbers are showing first signs that the base effect at least had kicked in. Looking at the Maruti numbers, I can, really sense that now.
Okay, that's the view coming in on the auto sales numbers.